Hey guys, welcome back to the Gold Age Academy, where we simplify trading and help you understand the market with confidence. In today's video, I'll show you how to take high probability trades using pure technical analysis. We'll break down the market step analysis, identify the trend, mark key support and resistance levels, understand the market structure, and find precise entry, stop loss, and take profit levels. Whether you're a beginner or looking to improve your consistency, this lesson will give you a practical approach so you can apply to your own charts. Grab your charts, stay focused, and let's dive into the analysis. So today we are going to discuss on how you can take trades news using pure technical analysis. For example, here we had this news on June. This was Friday. This was NFP news. So I'll show you how you can integrate technical analysis. And in another video, I'll show you how to use fundamental analysis, so that when you integrate both, you have a higher probability of winning in most of your trades. So let's begin. Now here we can see that we had a trading range in the 15 minutes time frame. We had a range. This trading range broke out with a candle closure to the upside. But before the news, what we want to see is, we want to see a candle, the candle like before 5 minutes to NFP or any other news, any other event. You want to see the next candle close inside, maybe 5 minutes before, maybe 5 minutes or 10 minutes before. You want to see that candle close inside the range. Sorry, 15 minutes range of 15 minutes to range of 5 minutes to 15 minutes. You want to see a candle closure inside back inside the range. So this will look like a accumulation, manipulation. Then we close inside the range. Then we our news, when the news break, then we get our distribution. Hope we are together up to there. Now let's go to another. So guys, the other news that we had was FOMC news. This was on June 17th. Yeah. Okay. So here we can see that we have a trading range in the 30 minutes time frame. So what we want to do is mark our range. Yeah. So from this is our range, from here, our range from there to this zone. I'll make a video on how to mark your ranges. So what you can see is, I'll give you a test. So below this high that was never broken, anything that trades below this high is our range. Okay, and anything that trades above this low here, anything that trades below this low and below this above this low, sorry, anything that trades above this low and below this high becomes our range, our trading range. So we can see that we had a trading range here. We had some consolidation, and then the market broke to the upside. So this was our manipulation, accumulation. Sorry, and then we had our breakout, which will be our manipulation. And then after that breakout, we had our distribution. If you're not able to catch that move, then you can just use your Fibonacci retracement tool from this low, from this high to this low, and wait for a retracement to these zones, either 0.5 and 0.68 or the 0.76, and you go down with that move. Okay, you can take your shots from here. Your stop loss target, you can target this liquidity here, this liquidity zone right here. You can target that. And your stop loss just above the 0.76 Fibonacci retracement zone. We can put it slightly there, just above. Yeah, and the trade played out perfectly. Let's move on to our next example. Our next example will be yesterday CPI news. CPI news on July 14th, 2026. So as you can see here, we had let's go to our 15 minutes time frame. Yeah, okay. Let's move to our line chart. We had a break of structure to the downside. This was our last break of structure to the downside. After our break of structure to the downside, we know that we have to break this low to change character. Okay, so we can go back to our candles. Yeah, so you can pull this just a little bit above there, so that you can see clearly. Okay, now we can go back to our line chart. So we had that move, we had our change of character. So what you do is the leg, this leg is the leg that that led to the change of character. So you take your Fibonacci retracement tool from that zone to this leg here, and wait for a retracement to the 0.76 zone, and wait for the market to play out. As you can see, we had a slightly small move up here, so you could have put your maybe a trade after the entry. You put your trades to break even, so that if the market goes against you, you don't have to worry much. Yeah, okay, thank you very much for watching. This will be the end of our video. Hope it helps you in the future for your future technical analysis. See you on the next one. Subscribe. Thank you.